What's going on, YouTube? What's happening? What's going on? Hey, what's the pillow? I hope you're having a great day. I is having a good day. We did something amazing on Warframe. If you want to know all about it, be sure to check out some of the live streams I've done these past couple of weeks. You'll see exactly what I mean by that. We are going to continue to do day trading because I wish to learn day trading and all it has to offer. Yes, yes. Thank you for coming to my TED Talk. Anyway, hi. Welcome to Word Plus. I'm learning how to day trade, and if you've been around for a little bit, you understand one, this is a new channel. Two, I haven't had many videos on this channel that have been very meaningful, very impactful, aside from the few videos that I've been posting here recently. And if you have been around long enough to have seen where I said I'm learning how to day trade or how to invest through day trading again, you'll notice in that video I explicitly state that one, there is going to be a lot of repeat content on this channel. That is primarily me uploading a very long, very quiet, very unedited form of the video I choose to upload, right? From that video, I will take it back offline and I will cut it up into smaller bits and pieces, mash it all together in one great big edit, so that way you can see my progress from point A to point B and my understanding and how to day trade. With that being said, I'd like to also bring to light the fact that one, I am not at the moment a professional day trader. As much as I'd love to be, I'm not there yet. And so, with that being said, I'd also like to express that I am learning my trade. I'm learning how to day trade through, guess what? TJR Trades. If you haven't seen any of the descriptions of these past, like, how many, 6 videos, 5, 6 videos, something like that, you'll see where I'm linking his channel and the video I'm watching on my laptop on the video. So if you think I am doing a poor job at explaining this and you're interested in getting in your start in day trading, I highly recommend going to check out his channel. He teaches for free all of what he's had to experience, and he honestly seems like a trustworthy enough dude to go ahead and to learn from. And that is essentially what I've done, is I've taken the time of day for the past 3.5 years to really dial in on what this man has to offer from his own experiences. Before we get too much further, we're going to go ahead and mark open our sessions right quick. We got this one here. Today is Wednesday. I'm on the wrong gist. Boom. Eat. Boom. $24.8. We are a little early on the recording. I imagine I have an alarm that's about to go off here in like a minute. You ready? You ready, chat? You ready to shut up this alarm? Hope you're ready. We got a minute. 30 seconds. This will get cutted in editing, definitely. Pre-market open is at 7:30 a.m. So I'm thankful that I have this alarm set up and ready to go. 3, 2, 1. Alarm just went off. Glad I caught it when I did. So, we're going to go ahead and go to YouTube on this. Boom. Pre-market open just arrived on. Perfect. I actually saved my tab. Go Opera GX. That's something Google Chrome never does. Heck yeah. Anyway, let's go ahead and get into this video, shall we? With what we've done in the previous video. What did I do in the previous video? I went over how to spot liquidity sweeps within the market. I learned what liquidity is. I know what market makers do in order to manipulate price to go in their direction, right? I believe I stopped on breaker blocks because I felt myself getting tired and I did not want to strain myself any more than I had to in order to retain my information. Just to reiterate, liquidity sweeps happen when a candlestick on a downtrend, when market makers manipulate the liquidity on a buy to fill their sell orders in a downtrend. I think that's what I got confused on last time. When I tried explaining it, I think that's what I got confused on. I'm going to go and delete these two because I think they are no longer valid. I believe this right here is our inverse fair value gap. Because let's go to the 30-minute and just look. Boom. I don't know what's happening here, but oof, there is no candle between the two of those. Price just took a hike up. I'm pretty sure this was a fair value gap at one point, and I had it marked out, and then we closed below it, like mid-video. We closed below it, and we saw it dance around in this. I think we got to like this candle in the last video, and then I had to go to sleep because regular blocks and the like. But going off of, yeah, because I said right here on this low right here, we were expecting this to close below this low, creating a fair value gap right there, right? Because we do have, in fact, a fair value gap that has almost been completely filled. There is still an imbalance here. Yeah. Let's start with liquidity sweeps because it's the hardest concept to grasp. First off, we defined liquidity. Where is it? What is it? Resting orders above highs and resting orders below lows. Market makers use these highs and lows to manipulate the market. They essentially take the resting orders, and for those who think it's going in a downtrend, they get stopped out up here, right, when we're going up. And so they fill their massive amount of sell orders off these buy orders to push price back down. Same can be said for a downtrend on a low. People who think it's an uptrend get stopped out on a low. The market makers proceed to sell to fill their buy orders with their sell orders, pushing price back up. Liquidity sweeps. And these can be spotted relatively easily. Let me find my horizontal line. Boom. We have essentially, we just mark out a low. Boom, boom, low. Boom. We have not had a liquidity sweep off of this low. How do we know? Price hasn't had a chance to move past this line. If price wanted to move past this line, that would be a liquidity sweep. Liquidity sweeps are signs of reversal. When that occurs, we expect price to go higher because right now we are, as a result of this, in a downtrend, though I do believe we have not broken structure yet. And we are, in fact, in a downtrend. We have not broken structure. How have we not broken structure? A break of structure is when a candle closes above the most recent high. This right here is our most recent high. The highest point within the past several hours of market. This is also the highest high Asian session hit. Boom. We're going to mark that. This is the lowest low that Asian session has hit. Boom. There. Liquidity rests above highs and below lows. We know there is a imbalance in the market per, let me find it. This right here. Boom. It is currently getting filled, right, by the market. So what are we looking? We're looking for a liquidity sweep. Where? On the upside for continuation going, for that continuation confluence that we are moving back down. Let's check the other chart and see if we can find a divergence. Are we sitting on the 30-minute for this one? We are. 30-minute, 30-minute. Good. Boom. Let's go ahead and do this. Get it looking nice and familiar. Let's go ahead and clear. Let's just do this. Remove 10 drawings. Boom. I don't think it destroyed those. It didn't. Good. So What in the world has happened? What is going on here? Did y'all see that, chat? Comment section, did y'all see that? I don't know what happened there. That was weird. Very, very weird. I've never seen that happen before. So this is a thing. This is a thing. Boom. Let's go ahead and do this. We have rectangle. Boom. Fair value gap. Boom. This is current. Current price action, current imbalance. This is what we're after. Our most recent low. Let's actually go back to this. Make sure, yeah, we marked that. So our most recent low that we marked on the previous one, this is the part where we're looking for a reversal off of. Liquidity has to sweep this in order for it to go higher. Realistically speaking, we can actually consider this liquidity sweep. Why? Because we have one low, down, up, lowest point here, right? Boom. It swept past this and price took a hike up. And as a result of market makers taking advantage of the liquidity off of this high here, we actually got our push down, and that was the market makers move, trying to make price move lower. Filled their massive amount of buy orders with the liquidity found just below this low, push price higher. With that being the case, we're going to delete that line because it was swept. We're looking for price to continue going higher. I think I've been saying this wrong the entire time, because he even explains it in the video, if you go and watch it, that there are two positions you could take: a buy position and a sell position, or a long position and a short position. A short position is best taken on downtrends. A buy position or a long position is taken on uptrends. Per this move down and this imbalance, we're technically right now, if seeing as it's me looking at this chart and it's my chart and I'm the one looking at it knowing, hey, this might continue happening, I am looking for a buy position. Why? Because I don't want to sell my money just yet. I have nothing to sell. I have to buy low and sell high. That's how the market works. Market makers make things a little difficult when they manipulate the market like this, but that's also telegraphed. We can see that when they manipulate it and predict the future off of that move. We know what we're looking for. Let's go ahead and get our vertical line out. Good. We have Asian session open. We have, I'm getting good at this, chat. Slowly but surely, I'm getting good at this. 8. Boom. We're in pre-market here. Let's go ahead and mark out Asian highs and lows. We have Asian high there. Boom. We have Asian low there. Boom. We have London high. How do we determine a high? Up, down, highest point between the two. Boom. How do we determine a low? Lowest point between the two. And this is also where I get confused, partly because he didn't really go into depth when it comes to multiple candles going up. I'm going to say that's a green candle, just cause. And we haven't closed yet. Like, well, I'm sorry, we have closed. Technically, we are in, what's it called? Australian session right here. These two candles, this one and this one, are considered Australian session. So we don't count these two. If I had to guess, I'm going to say the lowest point that you got to is right here. Realistically speaking, per the session, it should be down here, though. Like, that makes the most sense. Duh, it's the lowest point. After their session opened, that price was after open. And this was the highest. With that being said, we have technically our price range, because we went from up here all the way down here. Boom, right? The only real way for this right here to get closed below is if it gets crossed, and technically it kind of did this. So we don't care about this, and we don't care about this. Why? Because the previous session had it all the way up here and all the way down here at the same time. Let's go back to this chart right here. we have similar gist, right? We don't care. What is that line to? That is from the previous gist. We can close that. Yay. This is our price range. This is the most recent low that we could take as a take profit on a short position if we're looking for that. If we wanted to, we could actually target this low right down here. Lowest point, down, up. Boom, right? Just so we're on the same page. And if we wanted to, just cause I'm feeling interesting, down, up, boom, right there. If we're looking for short positions. And then long positions, we have the high there. We have up, down, highest point right there. Boom. Highest point, up, down. Boom. And just because I'm feeling interesting and inclusive, up, down, highest point, boom. And that's before this move that we can take off of. We have most recent highs and lows. We could take profit if we're looking for either side of this coin that's moving at the moment. Right now we are just now moving up. We had a liquidity sweep actually right here on this candle. This candle swept this low right here. Boom. As a result, price took a hike higher. Our order block was this candle right here. This is probably the most confusing order block / breaker block I think I've seen, because an order block is essentially the move down before the liquidity sweep back up. Or, I'm sorry, is the move up, seeing as we're in a downtrend, that causes the liquidity sweep down, right? So, as a result, it would be this candle right here. This candle would be our order block, liquidity sweep, price takes a hike. Boom. Our goal at the moment is trying to find out exactly where our breaker block is. What is a breaker block? How do we determine a breaker block? The like. With that being said, I'm going to watch this video now, because we stopped right as he was describing a breaker block, or right after he explained it, he described it. So before we get too much further, because he's already drawn it, and I'm pretty sure I've already explained it in the last video, I want to make sure I have my gist covered. So we have an uptrend, we have downtrend. Boom. So a liquidity sweep is this right here, when it crosses this and price goes down, or when it crosses this low here and price takes a hike back down, right? These are our liquidity sweeps, okay? The order block is the leg up, or the leg, or in a, sorry. Does that make sense? Yes. So an order block is leg up in an uptrend, right? That prevents, that causes this liquidity sweep higher, right? This is the market makers filling their buy orders from their sell, right? That failed to meet this. And so it came higher and filled, and then I said that backwards, didn't I? The market makers wanted to push this down, so they filled their sell orders with the buy orders resting above this. As a result of there being that, it fell. And the same thing could be said here. When the price took a hike back up, I'm going to draw this a little better. I'm going to draw this a little bit better. Boom. So when, so when price cross this, that's our liquidity. The order block is the line, the retrace up, right, that causes the liquidity sweep. So this right here is market makers filling their buy orders, right? in order to reverse price in the opposite direction, right? And he explained it in the video that the breaker block is the lack of sell orders, right? It's the same as fair value gaps in that it is a lack of sell orders, or in an uptrend, it's a lack of buy orders. And as a result, market makers need to flip the script. They need to change the way the market moves. And how are they going to do that? By filling their massive amount in an uptrend sell orders with resting buy orders up here, right? Breaker blocks are essentially the imbalances showing the lack of buy orders, or the lack of sell orders within a market that's buying. And in a downtrend, it's the amount of buy orders in a trend of sell orders, right? They have to fill those with resting orders down low in order to reverse the market, or in the orders up high. They need their sell orders from where they can get it, their buy orders. And he described order blocks as the opportunity market has every time it crosses one of these lows or it crosses one of these highs. Market has the opportunity to sweep this liquidity, and market makers have that opportunity to fill orders that weren't there before, and as a result, push market down. That is what an order block is. That is how market makers use them. Let's go ahead and clear all this. Let's go ahead and watch order blocks. Not order blocks. Breaker blocks. I wish to learn breaker blocks to best hone in on that.